Hello, I'm Kamal Santamaria. This is Counting the Cost on Al Jazeera, your weekly look at the world of business and economics. This week, China. From boom to bust in 12 months, just what has gone wrong with the Chinese market? And can Beijing stop the rout, or would that only reverse its push for a free market economy? Also this week, Nigeria, a new president trying to overcome some old problems. We look at his drive to create more jobs in agriculture and why these dairy farmers just aren't convinced. And as Greece's economy spirals towards a possible exit from the Eurozone, we're looking at the impact on business. In this port, for example, where there's not much fishing, or shoppers, or tourists. By our own admission, we don't often talk about stock markets on this program. There are other, more relevant ways, we believe, of counting the cost. But it's hard to ignore China's stock market at the moment, even though that's sort of what's been happening, what with the economic attention being focused on Greece. What we have in China is the worst mainland market slump since 1992 and a witch hunt to figure out what triggered it. All told, $3.5 trillion been wiped off China's market in the 4 weeks of market chaos. That is more than a third of its value. And that's after a 12-month boom where stocks rose a staggering 150% despite a struggling economy. Obviously, it's made many people rich, but the problem is they've literally mortgaged the house to pour that money into the market. Chinese brokers have loaned an estimated $339 billion out to traders, so the government has now tried to step in. It's stopped companies listing on the market, as investors typically take money out to invest in new companies. It's also trying to encourage pension funds to invest more. It's blamed international investors and even the short sellers as well. But don't think that this is all about the big investors with the big bucks. Many of the people who've lost money have been small investors who've seen their savings wiped out. Scott Idler with this now from Beijing.
Early in his career, Zhang Kuai worked in America's Silicon Valley. 10 years ago, he moved home to China as he saw more opportunity here. That paid off. He invested in the stock market. In the recent sharp downturn in the markets, he has lost over $100,000, but he's not ready to cash in his remaining stock.
Where else can I put it, all right? I don't want it to sleep in the bank, and well, buying house, it might not be a good idea either, so I'll just leave it there.
A stagnating housing market is only one part of the reason there's been such a surge in stock buying in China. Savings rates are also below inflation, which means the growing middle class has few options where they can grow their money. So with the surging bull market earlier in the year, many jumped in, some say with government enticement.
The bull market is encouraged by the propaganda. We all want a bull market. I think, in a bull market, everybody is happy, right? The companies can raise money through selling shares. People are making money from the market. The government can, sort of do a lot more with a bull market. All of this is actually sort of accelerated the market on the way up and then, accelerated on the way down as well.
Unlike other developed stock markets around the world, China's main pool of investors are not professionals. The vast majority, some 80% of those trading on China's stock markets, are individual investors with little experience. Those are the ones the government is worried about, saying that their panic selling added to the market slide. Over the last several days, China's central government has put mechanisms in place to help stabilize the market. It's also planning to invest as much as 30% of the country's pension fund system in stocks. So it appears to be reluctant to give up on its bull market just yet. Zhang Kuai is not happy about losing money, but he characterizes the last few weeks as market growing pains.
When I make money, okay, I don't give it to anybody else, right? I take all the glory and all the credit. So, well, I think it's only fair if I lose money or I cannot make as much. I shouldn't blame the government or the system.
There's no way to know when the current market volatility will end. So it's unclear just how much more Zhang Kuai and his 90 million fellow individual investors might stand to lose.
Well, let's go to London now to talk more about this. Andrew Kenningham is with us. He is the senior global economist at Capital Economics. Thank you for your time, Andrew. Talk me through what you think has been behind this crash, because when you think about the rise of the market for so long, for it to come down this quickly, it's quite something.
It certainly is quite something, but I think the main reason it's fallen so far is the fact that it rose far more beforehand. So we saw a huge bubble in the market, which began in the middle of last year. Prices have more than doubled, depending which index you look at, over that period. And then they've just given back about 30% of the total market value. So they're still well up on where they were last year. You can always spend a lot of time looking for the trigger of what actually caused it to go down. And I think there may have been some changes to funding, the rules governing margin requirements, which is one of the ways that affects the costs of speculating, if you like, in the market. But I don't think that's a very significant factor. It's really the bubble that's important.
Okay, so the bigger the up, the steeper the down. That makes sense. But then where does responsibility lie? Do we have to look to Beijing for ultimate responsibility, given it was encouraging people to buy up stocks?
Yes, I mean, I think that in retrospect is something they probably regret. I mean, they very actively encouraged people to invest in the stock market. It seemed that's something that they wanted to happen for reasons which I don't fully understand, but I guess are largely political rather than economic. I would have thought people in the central bank would have been cautioning against that. It's certainly not conventional policy, and it doesn't fit in with the general moves towards a more market-determined economy that they're pursuing otherwise. So, yes, it is probably the responsibility lies with them. It's like also any other stock market bubble. Every individual investor has to take responsibility for their own actions. And a lot of people perhaps got their fingers burnt who would have been wiser not to get involved.
It's funny, though, because for so long with China, we talked about it being a managed slowdown. The double-digit growth days were over, so it was about managing the slowdown, and this seems to be the absolute opposite.
I think that's right, and I think this is a bit of an aberration if you look at the broad sweep of reforms that they're implementing and the general way they've managed the economy. It's been fairly steady and cautious and conservative. They seem to be trying to slow the economy, as you said, and reduce the pace of credit growth, which is where the real risks lie in the economy. And I think they've been quite successful in that. The stock market seems to be one area where they've taken a rather different approach.
And what about the efforts to intervene now, to try to stop the rout? What do you make of those efforts?
Well, right now they seem to have been successful in the last couple of days. We've seen recovery, so it's been a real yo-yo in the last few weeks. So it's up more than 10% in the last 2 days. But they've really thrown the kitchen sink at it, and the central bank is now indirectly buying equities itself. They've got enough cash and firepower that they can do that. And so, if they really want to keep the equity market up, they probably can. On the other hand, I suspect they're not feeling very comfortable about having got themselves into this position.
Well, this is the thing. You say they've got cash and they've got firepower. They've also got a lot of debt. The numbers I've got here, household debt of $28 trillion, which is 282% of GDP. And then so much money was borrowed to fuel this market boom, like 340 billion odd was borrowed. So it's just this debt. We focus so much on the Greek debt at the moment. I mean, something like China's debt could actually be potentially more serious.
Well, the debt on the whole, if you take the overall debt position of the Chinese economy, looking at the public sector and the private sector together, it's nothing like as worrying as Greece is. And the other factor is, of course, that the economy is growing very rapidly, which would allows them to service a much higher debt level. So I think there will be problems in certain areas, certainly in the financial sector. But they should be problems which can be managed by the Chinese authorities. At the end of the day, they can take a lot of debt onto their books at government level or at the central bank level if they need to.
So then risk of contagion, is that, I mean, again, in the Eurozone, we talk so much about the threat of contagion, especially through the southern states. Around China and other economies in Asia, is there any risk there? Or do you think, again, because you're saying that China can service the debt a little better, it can be contained and held in place?
Yeah, no, I think China itself is not facing a debt crisis. It has had a major equity market bubble and correction. So it's not, that's not the problem they've got. From the equity market, it's interesting that there hasn't been a great deal of spillover to other countries, either countries which are dependent on China itself for their exports or which export commodities which are largely dependent on what happens in China. So there hasn't yet been much contagion from the equity markets. In terms of the economy generally, we're expecting it to slow a bit, but not dramatically. And provided that's the case, then again, there are effects and ripples around the world. Of course, if China's growing at 7% rather than 10%, particularly for commodity exporters, so it's affecting Australia with its iron ore exports, for example. But on the whole, we think this is not going to be a major problem for the rest of the world.
Andrew Kenningham, pleasure talking to you. Thank you for your time.
You're very welcome.
Now, let's just go back to Zhang Hui, who was the investor we saw in Scott Heidler's report. He'd come back to China after 10 years in the US, and this is actually an example of what the Chinese government wants. Expats coming home to help broaden and strengthen the economy, along with foreigners as well. Margot Ortigas reports now from Beijing.
Edwin Ma is a recognizable face in China. He's the first non-Asian to deliver the news on the state's English channel. Ma has lived in Beijing for 12 years. And is one of only 8,000 people who has what's called a green card. This gives foreigners permanent residency, with similar rights and access to social services as a Chinese national.
It gives you a feeling of being part of the community and not having the hassles that I used to have when I came here. You know, where's your passport, show your passport and all this sort of thing.
But getting the green card wasn't easy. The rules for it were put in place in 2004, but only those who made what the government calls exceptional contributions to China were even considered. It's now easing those qualifications.
Of the 1.4 billion people in China, less than 1% are foreigners. Without green cards, they're issued special visas. These visas only allow them to work a specific job in a specific company for a limited time.
But to further development and competitiveness in the world market, the Chinese government wants to increase the number of foreigners to at least 10% of the population. And the main target is getting Chinese immigrants to come home. Marvin Mao came back from New Zealand, and he successfully launched several internet companies.
I'm traditional Chinese, but I got a global perspective, education, and somehow the global behavior. The world is flat. So basically for me, especially most of the internet startups in China, they want to go public or go global, right? So it's even more advantages for the people like us to do business here.
The government might be succeeding in making the business climate attractive for returnees like Mao. But some say there's so much more it has yet to do to keep all foreigners happy to reside in China.
And still ahead on counting the cost, getting Nigeria's economy moving. Now the country's new president hopes to revitalise the dairy industry and create jobs. Right now, though, we turn to Greece again, and with the creditors taking a tougher line after the referendum, the prospect of a Greek exit from the euro is more likely. The Greek banks have been shut for more than a week. Small businesses are really struggling to stay afloat, like in the fishing industry, for example. Hoda Abdelhamid visited one community that's really suffering.
It's a postcard image of Greece, a port, its boats and its fishermen. But there's no escaping the harsh reality Greece is facing.
Until now we survived, but now I don't know if I'll be able to continue. These days starting a fishing business is madness, but I inherited this and I will pass it on to my son.
The Maritsas family has been casting their nets in the Aegean Sea for 5 generations. The whole economy of Nea Mechanion revolved around fish. It's considered one of the most important fishing ports in the country. A reputation difficult to understand these days. Normally, this market would be buzzing with Greek people coming here to get fresh produce. Now the stalls are pretty empty, half of the shops have closed down, and the fishmongers who are still working say that they are selling about 60% less than before. And since the banks closed more than a week ago, there is barely anyone here. Fish is a big part of the Greek diet, but Yorgos Solafakis says it has become a luxury. He lost his job 6 weeks ago, and at 60 wonders if he will ever be hired again.
I used to fish at least 2 or 3 times a month. Now it's twice at most. And I have to buy the smaller, lower quality ones. I can't afford it otherwise.
It should have been the summer season for Tula Samara. Her restaurant just across from the market opened 17 years ago. It had a reputation that went beyond the village. Empty tables are the new normal nowadays.
I wake up in the morning wondering how many people will come. Sometimes there's no one. It's so hard. I now take antidepressants. But we are proud people, and the EU won't take our dignity away.
People here, like elsewhere, are resilient and say the country will come out of the crisis one day. But when and at what cost?
Now, Muhammadu Buhari, he's the president of Nigeria. He made history by becoming the first to unseat a democratically elected president through the ballot box. These days, though, his challenge is to leave some sort of economic and political legacy. But just look at the issues he needs to tackle. Sure, it's Africa's largest economy, but the UN estimates 67% of the population lives in poverty. Buhari says he'll invest in mining and agriculture to increase employment. He has to tackle Boko Haram. This was a key election battleground. Now Buhari needs to deal with the armed group and improve the lot of the impoverished north. The currency is a problem. Most of that is due to the falling oil price, but Nigeria's now also banned some imports in the hope locals will find homegrown solutions. And finally, corruption. $20 billion allegedly went missing from the state-owned oil company, and an independent report into the missing money has not been published. So let's just pick up on one of those 4 points now, that is creating more jobs in the agriculture sector. Dairy farmers in Nigeria have long complained that successive governments just haven't developed their industry. The biggest problem is getting their products out to market. Nwodo Jnr looks at the issues from Soba in Kaduna State.
Cows are a major source of meat in Nigeria, but their milk is an untapped resource. Jamil Farms in Soba, Kaduna State is one of the dairy operations in the country. Yakubu Muhammad has been working here for over 10 years. He uses rudimentary methods to produce yogurt because they don't have the money to buy proper equipment. The farm only produces around 1,000 small bottles of yogurt a day, and there are other issues as well.
We face the problem of having very bad roads. It's a huge issue to get our products out of here. We also desperately need medicines and vaccines for the cattle, but they're really expensive. We need help in that regard. And animal feeds, we need those too.
The yogurt is packaged at a facility 2 hours away. Once again, workers here use some handheld methods because of a lack of machinery. Dairy producers say if they were given the right support by the government, they could overcome all these problems.
The government are not helping the situation. You see, it's like the government focused their attention solely on the petroleum.
Nigerians spend billions of dollars every year buying imported and processed dairy products.
The problems affecting the dairy industry in Kaduna State are similar to those affecting other products too, like cotton and ginger, which are produced here too. Problems including a lack of constant electricity and storage facilities, which makes it incredibly difficult for producers to bring their products to market.
The government says it's doing what it can to create the right conditions for the dairy industry to thrive.
What we did, as I said, is to improve the process, and then also the establishment of these multiple milking centers across the country where people bring their cattle and milk. Going forward, by the time we establish the ranches, milk production will become integrated, it will become scientific, and we are gradually reducing imports as we ramp up local production.
But dairy workers at Jamil say the government must also help dairy producers raise money to improve their operations and create the right conditions for investment.
So let's analyse now what this Nigerian government needs to do. Charles Nwodo Jnr is with us from Abuja. He is the executive chairman of the diversified services company XL Africa Group. Charles, so many things we could talk about. So let's just sort of pick them off one at a time, as we've done already. Employment is where I want to start. How much of this do you think is in the hands of the government versus the private sector? What responsibility, I guess, should the government be taking here?
The job creation, as you know, it's a major issue in Nigeria right now. It's estimated that Nigeria requires about 24 million new jobs over the next 10 years just to reduce the current level of unemployment by 50%. And so, luckily, the present administration promised this. This was central to their election manifesto. They promised to create a lot of jobs. But back to your question directly, the government needs to jumpstart the public sector works. There's a lot of emphasis on public sector, using the public sector to implement some of their election promises in the areas of repair and construction of infrastructure, highways, bridges, new roads, schools, hospitals in different parts of the country. This is one small effort that will catalyze the rest of the economy. And then, of course, creating the right incentives, the right economic incentives for the private sector, creating the enabling environment, strengthening the laws, the tax regime, the fiscal regime, the investment climate to enable the private sector to then play the role which should normally be that of the private sector to create jobs. So yes, it is the private sector essentially that creates the jobs that will be required to create the jobs to help solve the unemployment problem in Nigeria. But the government has to, take the lead and create the enabling environment for this to happen.
But before any of this can happen with job creation or with any of Nigeria's problems, security has to be sorted out first, doesn't it? I mean, the threat of a group like Boko Haram, other groups, it will undermine any efforts to improve Nigeria. Do you think the government is going to put more funding and more help, I guess, into the armed forces for this fight?
Oh yeah, the president has, not only promised but actually gone ahead to try to tackle the Boko Haram problem, from a more strategic and all-encompassing manner. The Boko Haram is no longer a Nigeria problem. It is now essentially a regional problem. And so to tackle it, there's a need to build a regional military consensus and a military force that is effective and that is cross-border in its capability, and that's the starting point that the government has done. This government has done that very well. The next thing is to equip and properly resource and empower that regional contingent. The way the present government has done is to essentially unleash the renewed military capability and the necessary political will on the efforts, and then more or less outsource that endeavor to the military that has the capability to do it, not just the Nigerian military, but the regional military commanders, and then concentrate on dealing with the other equally challenging issues of job creation, political stability, inequality in the society, and so on and so forth, and generally to meet the large expectation of Nigerians, from this present administration.
Charles, let's move on to one more problem, unfortunately. I'm conscious of being too negative here, but this is the currency, the falling currency in Nigeria, which I'm sure is helping stoke inflation as well. Again, do you think that the government and the central bank have this under control? The central bank has stepped in and it doesn't allow the import of certain products now. Are these the right moves?
Well, you would recall that the Central Bank of Nigeria, under the present governor, has managed to keep the inflation well, within the targets, 9%, for the past 24 months. Now, with the election and the post-election uncertainties and so on and so forth, of course, there were some pressures, but they decided to keep the rates, retain the rates. Essentially, there's absolutely nothing wrong with the measures that the government has taken, the central bank has taken. I mean, there is nowhere in the world where people are allowed to just utilize foreign currency, in any manner that they want and whenever they want and for whatever imports that they want. So you ask me, in the short term, I think that Nigeria, we can live with a predictable and stable exchange rate situation well into the midterm, if you ask me, yes.
Charles and Nwodo talking Nigeria with us. We thank you very much for your time, Charles. And that is our show for this week, but there's more for you online at aljazeera.com/CTC. That takes you straight through to our page, which has individual reports, links, and entire episodes for you to catch up on. You can also get in touch with us by tweeting either me at KamalAJE, our business editor is at Abid Oliver Ali, and you can use the hashtag AJCTC when you do tweet us. That is it for this edition of Counting the Cost. I'm Kamal Santamaria from the whole team. Thanks for joining us. The news on Al Jazeera is next.